Today, we're going to dive into Bitcoin, get into a little bit of ETFs, and then also get a little bit of expertise around crypto IRAs and how all of this could play out into your investing strategy going forward. I think you guys will like it. My name is Paul Barra. Welcome back into Tech Path. This is going to be a good one. This, of course, is one of our sponsored episodes by iTrustCapital. And if you guys are looking at getting into crypto IRAs, this is one of the places to go. Jump over to iTrustCapital.com. It's one of the best tools out there. You can, of course, do all of your own self-directed IRA moves. And the cool thing around this is that I think is you've got such an array of tokens that you can jump into. So if you're not just a Bitcoiner, maybe you want to get into ETH or small coins, all of that can be done right there in the program itself. So make sure and use our link down below and use our link. It's going to give you a $100 funding reward. Now, joining me today is getting into kind of an interesting component, and that's Jared Feldman, who is the Senior VP of Operations over at iTrustCapital. We thought, hey, let's bring in the experts. So here you are. Nice to have you, Jared.
Thanks for having me, Paul. It's great to be here.
Hey, Jared, I want to talk about a couple of things. Obviously, we'll kind of lead off with tax deadline coming up, this weekend, moving into next week. We'll talk a little bit about the Bitcoin halving also happening in April, and then kind of direct exposure to Bitcoin versus ETF exposure, all of that. A few news items that I want to hit on and get your opinion on. One of them right now is kind of hitting this whole issue with what BlackRock's success has been. So new Bitcoin move here from BlackRock, which is now managing 10 trillion in assets under management when it comes to these Bitcoin ETF trusts. So I think what's interesting to me is you look at the appetite for this, and a lot of people have still directed and said this is mostly retail coming into it. Have you guys seen a bit of an uplift in the IRA side of it to where people are coming in and getting direct access to Bitcoin? How's been the play for you?
We've seen a lot of action over the last few months in particular. Something that's really of note is the amount of dormant accounts that really laid low, who were in hibernation, so to speak, during the bear part of the cycle, that are now coming back and reigniting their interest in the space. So we've certainly seen a lot of clients that were not logging in for a while, and now they're coming back in droves to not just check their account, but start to transact again. So we've seen a lot of that. In terms of what's driving interest in the ETFs, I think a lot of that is retail focus as well. These large banks and these institutions are driven by their clients, right? So when everyone asks, why is BlackRock doing this? Why is Fidelity doing this? They're not necessarily doing it out of the goodness of their heart, right? Sure. Follow the money. And the money is saying that people want to allocate at least a portion of their savings, whether it's retirement or not, into the digital asset space. And in this particular instance, Bitcoin is driving the initial interest.
Yeah, I look at it, from the one aspect where it has really kind of almost normalized what's happening in the digital asset side and maybe brought, Wall Street to the table. Some investors who maybe were a little slow in moving on this are now opening up their eyes and saying, okay, now it's a little bit more, I'll say, approved, even though we still have a large regulation issue in front of us. But you look at this statement right here, big companies now want to be a part of crypto and are no longer seeing a problem with it being made public. So now it used to kind of be, everybody kind of was a little bit of a hands off, but now it's completely different. Everybody's like, now it's almost like a badge of courage, that says you're doing something in the crypto space. With that being the case, and kind of the scenario, we've talked about it here on the show around the tax deadline, you can still take advantage of the IRA, contribution from last year up to the 15th, right?
Correct. So people who want to contribute to an IRA can still do so until April 15th for the 2023 tax year. So in theory, if someone wanted to fund an account now, they can do both their 2023 as well as their 2024 contributions. Yeah,
so that's one way of taking on, as opposed to going out into an ETF fund. You can say, okay, well, let's take a little bit of a tax benefit here, drop into an IRA, go that direction. I'm curious and this is just in general, because I've had a few of these questions in the comments. You guys, I know you can bring in other IRAs into iTrust. If someone had another crypto IRA, would they be able to port it over to iTrust? in kind of in the same fashion? How does that work?
Absolutely. We see that all the time. So most of the people who fund their account are doing it with an IRA or a 401k with a previous employer, which is coming in the form of USD. A lot of people move over crypto IRAs as well. The
Okay.
IRS does not permit for you to fund an IRA with anything but US dollars, right? But you can move assets in kind once those
Okay.
assets are purchased inside the IRA. So we had people move over digital assets all the time from other providers who maybe aren't offering them as many options or maybe have fees that are higher than ours.
Well, that's been the question by a lot of our viewers is, hey, I have a crypto IRA where I have Bitcoin and ETH options, but I don't have access to all these altcoins, and I want that. So can I move my IRA into iTrust so I can get access to all these additional tokens? Are you guys planning any additional new big announcements in terms of more assets coming in? What's kind of the roadmap there?
We have a lot of plans for the future. When it comes to the immediate future and plans for adding digital assets, we have things on our radar. Some of the AI tokens that people are asking for, some of the meme coins that people want to allocate a small portion of their account into as well. We're considering all options. We're generally pretty cautious when it comes to adding new assets to the platform, just because the digital asset space is so new. We would never want to add something that then causes issues or comes under regulatory scrutiny. So we are pretty cautious in general, but we take this very seriously in the sense that we want to add tokens that our clients want to see. So we're taking all the requests to heart, and we hope to have some really exciting things to announce in the next few months.
Man, I can't wait. I want to see the list that's coming in, because it sounds, I'm looking at the list right now on all assets. And I mean, you've got Dogecoin in there. And of course, one of our favorites, Avalanche, Shiba, quite a bit of the top 50 in here in terms of an opera. There's Maker. That's a good one. So I like the fact that you guys have so much flexibility. So it's going to be cool to see more of that. I want to jump over to another topic here. And this is ETFs capturing 4% of the Bitcoin supply. This is just in Q1. We're seeing this centralization of Bitcoin that's being done through these ETFs. And then you have people that are out there going, well, wait a minute, I want my own Bitcoin, and I want to be able to hold that in my own IRA and maybe in my own wallet if I'm going to just hold some over here, and getting direct access. And I guess that's the question. If we continue to see growth in the ETFs continuing to grow, do you feel like we're going to see more people taking that plunge into either direct self-custody or IRA type projects and products out there for having direct access? Do you think that's coming?
We do. Our thesis for the last year plus has really been that the ETF is going to be a great driving force for getting people exposed to the space. Once they dip their toes and invest some portion of their savings into the ETF, they're going to get educated. This is what people do. When they put their money somewhere, that's when they really go and get themselves educated and take it very seriously. And that's why we put a big emphasis on education and our philosophy toward interacting with clients. It's why we publish articles educating people, because once they get educated, they're going to realize that they're going to want physical access and exposure 24 hours a day. The ETF is only available 32 and a half out of the 168 hours in the week, because the trading hours are 32 and a half hours. So once they realize they want exposure to this class, they're going to want direct exposure. They're going to want 24-hour access. Our clients are able to sit on their couch and watch the PGA Tour on Sunday, and they can go and they can buy and sell digital assets at their discretion. So I think this is going to be a huge driving factor for people. And then once they get on a platform like ours and get that direct exposure, they're also going to get exposed to other digital assets that they're going to want to diversify into as well.
Well, I think that's the big value, the trades within the account. You guys have a small fee for those, just like any other exchange. But the fact is that you can make those trades without creating a tax event. That's a huge deal. When a lot of people are trying to schedule and plan, kind of their future of moving things around, especially if you look into certain tokens that are moving much faster. You look at just Render or some of the things with Avalanche that have really exploded, et cetera. I think that's a big advantage of that. I'm looking at this right here. This is an area that we're seeing some growth in. This was a tweet out there that was talking about Morgan Stanley and also UBS saying, hey, yeah, we're going to announce that we're going to be doing this deal with ETFs as well. So there's some opportunities where banks can now start to tie this in. I looked at this because many people are asking me, is it, do you think a bank will offer an ETF in the future? And I said, yeah, probably. But there's a lot of limitations to that. There's probably going to be fees that you may not necessarily like, because guess what? Banks are known for fees, and you're probably going to see those. With that being the case, more banks starting to maybe offer up these, whether it's UBS, Morgan Stanley, et cetera. What do you think is going to happen when the market starts to say, all right, now I realize how this works. I'm going to look for alternatives that gives me more direct into this, that I can take tax advantages and all that for. How do you see that going forward for you guys in terms of a roadmap, in terms of financial instruments and products that you're bringing to market?
It's a very natural next step for people to want to go from an ETF to get direct exposure. When it comes to our plans and offering different products, I don't necessarily see offering an ETF in the future. We are truly trying to be a Web 2.5 company, right? We're not Web 3 in the sense that we're not fully on chain, but we're also not Web 2.0 like some of these legacy banks that you're referring to. What we're trying to do is we're trying to be Web 2.5, which is serving as a bridge connecting people who have only been on the Web 2.0 interface to be able to migrate over to this new Web 3 world. And by doing so, just getting some investment allocation and exposure into this space. So I don't necessarily see us offering an ETF or any sort of product like that, because we really emphasize what I call physical crypto, meaning people can get a hold of it and put it in their own custody during retirement if they choose to do so. Something that I think is a really fun fact is that people on our platform, when they're taking a required minimum distribution, or if they want to take out money that eventually will be used toward funding their grandkids' education, they can take out retirement withdrawals in crypto, which I think is a really, really cool use case and something that really isn't on people's radar. So we want to focus on providing a digital asset, physical exposure. I don't necessarily see us having an ETF in the future, but one thing I've learned is to never say never.
Yeah, well, I can understand that. You bring up some interesting points here, because there is some max contributions that can be done. However, I was doing some research on this, for IRAs in general, and there are ways to do these mega, contributions based on certain analysis and certain structures. Have you guys seen anybody get more creative with being able to introduce more, more money into their IRAs faster, especially for people, say, over 50 that are kind of going in that direction? Have you seen that happen on your platform?
So if you're 50 plus, you can do what's called a catch-up contribution, which just means you can do an additional $1,000 on top of the annual contribution limit. So it really doesn't make a huge difference, even though every dollar counts. When you're referring to something like a mega contribution, this is really for folks who have a qualified plan in a 401k or can do a SEP IRA contribution. And for it's a simplified employer pension, is for someone who's self-employed and has like 1099 related income. And the IRS just introduced over the last year or so for the ability for individuals who are self-employed to actually do a contribution into a SEP Roth. Now, we do not provide financial advice. I just can't emphasize that enough. So if you're watching this and you're self-employed and you're interested, please talk with a tax or financial professional. But when you're talking about quote unquote mega contribution into a retirement plan, the only way people can do it on a platform like ours is through a SEP contribution. And now they're offering the ability to do a SEP Roth contribution.
So if that was set up that way, would I be able to, once it's set up, because that would be done outside iTrust, could I then convert that over to iTrust?
You can do a SEP contribution on our platform. We offer SEP IRAs. So
Okay.
people can absolutely do that on our platform. Now, if you're someone if you're self-employed and you have a solo K and you have a 401k that you're the only person in it, you're also
Yep.
the administrator potentially, and you might be able to do some sort of in-service rollover into an IRA with us. But we cannot help directly with a solo K, but we can
Right.
help people who want to do a SEP IRA.
Interesting. Cool stuff. I mean, this is some of the things I think that I can't, emphasize enough is that you look at the benefit, especially if you look at crypto, whether it's Bitcoin or Ethereum, you go out and get these assets at some of these depressed prices that we've seen over the last couple of years. Now these things are accelerating inside these IRAs. If I convert, let's say that Bitcoin goes to 100K and I'm sitting on Bitcoin in my iTrustCapital account, and I want to liquidate that. If I sell it, it's not a taxable event. Can I sell it to any kind of stablecoin at present, or do I have to sell it to another digital asset, or
So
just to USD?
we don't offer stable coins. We just offer a good old fashioned USD fiat.
USD.
So any of our clients can sell into cash at any point in time. And this is a really important topic that you bring up, because this is why the majority of trading in the United States actually occurs in qualified plans or tax deferred accounts like an IRA.
Yep.
So when you're watching CNBC or you're watching Fox Business and people are talking about transacting and trading, most of the trading actually happens within qualified plans. Why is that? It's because all of those transactions are tax sheltered. So if you have an event inside of your brokerage account and you make a really good trade and you're ending up in profit and you want to sell, you're exposed to capital gains. And you're going to give your accountant a big homework assignment at the end of the year, and they're going to have to analyze what your tax exposure is. Whereas if you make that same profitable transaction inside of a retirement account, it's completely tax sheltered. You're not even reporting those transactions. So that's a real benefit to being on a platform like ours, but also just doing any transacting in a tax sheltered retirement account.
Yeah, can't emphasize that enough. And of course, the cool thing is if you get that contribution done before the 15th, you've got that one. Then you can stack in your 2024 contributions. So you're kind of getting a little bit of a head start. If those of you watching right now have not, got your IRA going, make sure and check it out. I want to hit on one last thing, and that is more into the precious metals. You guys do gold and silver, but I looked at this and I thought this is interesting because now diamonds are arriving on a blockchain. This is a tokenized fund on Avalanche coming in. Is there any potential for us to see that coming into something like an iTrust account in the future? Are you guys looking at other assets, especially on precious metals and stuff?
We're definitely looking at other assets. We're exploring adding another precious metal on top of the gold and silver offering that we have. We just didn't end up doing it because we focused on adding 5 more digital assets at some point in 2023. I think in the summer, we ended up adding 5 more digital assets. But we are going to be looking on adding precious metals in the future. Our clients really like to allocate into precious metals. And ironically, the gold and silver that we provide is physical and it's through Kitco. But the ownership that Kitco utilizes a private blockchain technology.
Oh,
So
okay.
what's so interesting about that, what's so fascinating about it is that why would a company want to do that? And it's for the same reasons that Bitcoin has this digital gold narrative. It's the fact that the blockchain is able to reproduce something that's physical, but it's able to do it in a more efficient fashion. So diamonds, for example, sure, diamonds are great. They're shiny. You can physically hold them. But if you're able to get diamond exposure on the blockchain, you make them even more divisible. You make them even more transferable. You make them even more transparent and cost effective. So that's why there's such a focus from all sorts of different companies in financial services to pivot into blockchain in one way or another.
Yeah. Well, I could see this really getting creative over the years, especially for companies like you guys who are really kind of pushing the boundaries, because you're the first one that I've seen this much depth in digital assets out there. And because there's a lot of them out there that do crypto IRAs, but they don't get into to where you can really trade a lot of different digital assets. So as those things kind of grow, I think in terms of demand, and I would probably look to iTrust as being one of the ones to lead it out there. So hopefully that's going to be one. You guys got $9 billion in transactions 200,000 accounts plus. This seems to be continuing to grow and still one of the top rated solutions out there. So this is a good one for sure. This has been great. I've learned a little bit more around how to work these IRAs now, because we do get a lot of questions on the comments about these, Jared. So it was great having you in on the show today. Thanks for coming in.
Thanks for having me. I'll see you soon.
All right. All right, guys, you are maybe tuned in on the podcast side of things right now. Make sure and jump over here to the YouTube channel. This is where you can kind of get additional content that we do. Sometimes that it's not even in the YouTube channel itself, but you get access to our little own network, which is the Diamond Circle. Make sure and subscribe right now. We'll leave a link down below. It gets you an email. We'll drop additional research. We do all sorts of additional content there. It doesn't make it here. And of course, if you're not following me on X, it's just @Paul Barron. We'll catch you next time right here on TechPath.